Students, in this video, we're going to learn how to prepare a simple trial balance step by step using some simple transactions. Make sure to watch the video till the end and try doing it by yourself along with me. Come, let's get started. We have a simple question called JT Company that has commenced business, and in the first 9 days, these are the transactions. So the first step is to journalize these transactions. On the 1st of January, they have issued share capital. So the journal entry is increase in cash debited and increase in capital credited. On the 2nd of January, we have some purchases for which we have paid through check. In FA paper, we assume that bank transactions goes through in the cash book. So here increase in expenses, which is purchase, is debited, and decrease in cash is credited. On the 3rd of January, we have purchased an asset, a delivery van. So increase in asset is debited and decrease in cash credited. On the 4th of January, we have purchases on credit, which creates a liability. So increase in purchases debited and increase in payables, which is a liability credited. On the 5th of January, there's a cash sales. So cash debited and sales credited. On the 6th of January, there's credit sales of the remaining goods, which creates an asset called receivables. So, receivables debited and sales credited. On 7th, we have paid suppliers. So both our liabilities and cash goes down. Decrease in liability is debited, and decrease in cash is credited. At last, we have rent paid, so increase in expense is debited, and decrease in cash is credited. Now let's move to the second step, which is preparing ledger accounts. First entry involves 2 accounts, cash and capital. Let's create cash account. Cash account is debited here. So on debit side, we write the other account name, which is capital here, to say cash has come in the form of capital. Now let's leave some space for cash account and create capital account. In capital account, it's on credit side, but we put in particulars the other account involved, which is cash. Next transaction involves purchases and cash. Let's create purchases account and debit it with cash to say we have cash purchase. In the cash account, let's credit it as cash decreased. Now for next entry, let's open a delivery van account. And debit it with cash. And in the cash account, let's credit it and put it as delivery van. Next, we have credit purchases. We will debit in purchases account, and then create payables account to credit this purchases. I think now you're getting a gist of how ledger accounts are prepared. Okay, let's move on. It's a cash sales. We will debit it in the cash account and name it as sales. And let's create sales account and credit it in there. Then we have a credit sales. So let's open receivables account and debit sales there. And in sales account, we will credit receivables. Up next is a payment to supplier. So let's debit the payables account and credit cash. Lastly, we have rent paid. Let's open rent account and debit cash there with $200. And in cash account, we will credit. Okay. All transactions are recorded in journal and analyzed in ledger. Now it's the third step, which is to close off the ledger accounts. Let's start with cash account. Follow how I'm doing. Let's first total up debit side and credit side. Then we put the higher balance on both the sides, which is $11,500. Now in the side with lower balance, put a balance carried forward, and the amount is the difference between debit and credit side. Then we put the same amount as balance brought forward, and we put it on the opposite side. This shows that cash has a balance brought forward or debit balance of $4,500. Up next, we have capital. There's nothing on debit side. It's taken as zero. So, full credit side balance is considered as balance carried forward. Now let's do similarly for other accounts as well. Payables has $1,000 on credit side, and out of which we paid $800. So balance is $200. Let's go forward and do it for the rest of the accounts. Now it's time to prepare trial balance. So, if you see cash has a debit balance, on capital we have credit balance. Purchases has debit balance, and even the delivery van. So the logic is all assets, expenses, and drawings has debit balances generally. All liabilities, income, and capital has credit balances. That's why for payables and sales, we have credit balances. And receivables and rent has debit balances. So, yes. We can now prepare trial balance with all these balances. Let's put the basic format and start. Cash has a debit balance of $4,500. Let's refer the cell. Capital has credit balance of $10,000. I hope you guys are getting how it's done. So let's do it for the remaining accounts as well. Once all is done, it's time for the most satisfying moment. Let's total up debit and credit sides. And that brings us to an equal amount on both the sides. That's it tallied. Yay. I hope you all found this video useful. Do like and share and subscribe for more.